Alright, I'm going to talk about insurance, why I do not usually buy comprehensive or collision policies. 1, 2, 3, 4. Those three methods, please. I'm going to show you the math behind my thinking, and another reason behind my thinking is I pay for everything myself. If my parents paid for it, it would be an entirely different story. Of course, I would want those coverages. If you're fortunate enough to have parents who bought your car and pay your insurance and stuff, then this probably won't apply to you. You have an easy path through life, but I think the majority of people do not have that option, so I'm going to share with you my thinking. This license plate up here to start, I got this when I was younger. This means drive it like you bought it, and what you hear from kids whose parents buy their cars is you hear drive it like you stole it, and a lot of these kids total their cars. It happens in high school when their parents buy them sports cars. If I total my car, I'm out of a car. My top priority is to drive safely, and so I don't need to get collision coverage because I'm not going to crash my car. I'm a responsible person. So let's go through this. Liability only policy. I only buy liability to cover my financial assets. That's the money that I have in the stock market and in my other investments. Let's say I have $250,000 in the stock market. I'll buy a $300,000 liability policy only. The full coverage stuff I just don't even care about, and here's the reason why. My S2000 CR, I just bought that car. A liability only policy to cover all my assets was $600 a year. The full coverage policy was $2,400 a year. If we go back to, let's say someone bought this car at the end of 2008, in the beginning of 2009, and they bought a full coverage policy, let's see how much money that they would spend on the entire duration of owning that car up until this point. So I set up a timeline. 2009 is the first date we're going to use because that's when they make their first payment, beginning of 2009. And so we go through all the way to the end of 2015, which would be the beginning of 2016. The difference between these two is $1,800. So that would be the increased cash outflow annually. For insurance, I don't pull my money out of the market to pay my insurance bills. I use my paycheck, so there's no interest being earned on that money. It's straight from my paycheck into the hands of the insurance company. This would be the cash outflow. $1,800, $1,800, $1,800, $1,800, $1,800, $1,800, $1,800. 7 years of paying $1,800 extra dollars. And so we go and we get a financial calculator out. And so what we're going to want to do is put this in begin mode. Can you see that? Yeah, begin. Here we are in begin mode, and we're going to use the time value of money functions down here. This is a very important lesson I learned when I insured my first car. My required rate of return. This is the amount that I aim to earn every year. I aim to earn 10% on all of my investments, and so that's what I use. I use 10%. A lot of people say that's a ridiculous figure. I just like to, shoot high, and that's how I make money. I shoot for the stars, and I keep doing well. Present value is going to be 0, and then the payment that we're making is $1,800. When you throw this into the calculator, you get a future value of $18,784.59. When you look at this figure, what you should take away is, holy cow, that is a lot of money. That's almost as much as this entire S2000 is worth. What is the point of buying full coverage? And so that is why I do not spend any money on full coverage. Now, the longer that I do this through life, the bigger this figure gets. And I've been playing with very expensive cars, and so this figure is probably, 6 figures now, how much I've saved over time by not buying full coverage insurance. And yeah, I'll probably get criticism. People are insecure about this stuff. I'm gonna keep going with these videos because there's a lot of optional things out there that are taking away a lot of money from consumers. It's important to know this stuff because this will affect your retirement, and this will affect your life right now. So that is it. Thank you guys for watching, and enjoy your car.